Hey all, welcome to ShareTrek. This is Raj here. Today I would like to talk to you about Gingko Bioworks. And the reason I want to talk about the company is that I haven't spoken enough about Gingko in this particular channel. And it's high time I make amends for that, and we'll be covering Gingko more often going forward. So if you're interested in Gingko Bioworks, please press the subscribe button and also the notify button. The other share that I'm also going to cover starting this week is going to be Palantir. This is not a genomic stock, but this was something that I really covered a lot earlier. But there was a lot of equity dilution in there, so I had dropped it. But I'm planning to reinstate coverage onto Palantir because they made profits this quarter, and they have announced that they are likely to be profitable going forward for 2023. So it's time for us to cover Palantir and see if they have stopped doing the equity dilution. So I haven't looked into the stock for a while, so I'll take stock of it very soon. With that said, I would also like to give you a swing trading tip on DNA shares at the end of this video. So please watch out for that. With that said, I would request you that if you are watching our videos and if you are not yet subscribed, please subscribe. I'm aiming for the 3,000 mark, and YouTube stats shows that 58% of the people who watch our video are not subscribers. So please be kind. While you watch the video, just take a few moments to just scroll down and click the subscribe and notify button so that you can help the channel grow. With that said, let's get started. Welcome back, friends. The practice of risk management involves diversifying one's portfolio, and it appears Gingko Bioworks is effectively implementing this strategy in their business operations. While diversification may sometimes result in slower growth in investment portfolios, it also presents the opportunities for numerous lines of business to expand and mature over the next decade, potentially leading to the creation of a holding company for the larger spun-off entities. This outlook is particularly relevant for DNA, which is likely to see significant growth in various areas of business as a result of this risk distribution approach. DNA's recent activities related to biosecurity, which they have branded as Concientric, include several partnerships and agreements. In October 2022, DNA signed a biosecurity agreement with Saudi Arabia for comprehensive monitoring of pathogens in humans, crops, and animals. In December 2022, they signed a biosecurity agreement with Botswana. In January, recently, they partnered with Ukraine and on wastewater testing. More recently, it was announced that Rwanda has signed a one-year pathogen monitoring program at the Kigali International Airport. This program will identify new and emerging variants of SARS-CoV-2 through wastewater samples from arriving aircraft and also anonymous nasal swab samples from arriving passengers. Furthermore, DNA has already partnered with CDC on a pilot program in the United States to monitor influenza viruses and virus subvariants at the US airports. Of these activities, the biosecurity business, or Concientric, is the one that has generated the most excitement in my mind. The other news update is that DNA has tied up with BioVeg. BioVeg is a producer of highly functional and customizable bio-based materials. The objective of the tie-up is to develop cost-effective and efficacious bio-based materials to reduce the use of microplastic pollutants. BioVeg's existing products, which are based on biodegradable bacterial cellulose, have already been tried and tested by companies as an effective alternative to commonly used synthetic polymers like acrylates, polyethylene, and polystyrene, which are all distributed as granules, which are then processed and made into containers, etc. Synthetic polymers can be found in microbeads and textures used in various industries, including cosmetics, personal care, home care, agricultural coatings, and others, and contribute to the problem of microplastic pollution in surface waters around the world. Research in this matter also suggests that an average person could be consuming around 5 grams of plastic every week through their diet, which could potentially contain harmful toxins. As a result, regulatory agencies around the world and communities worldwide are taking steps to address this issue, such as, for example, the European Chemical Agency's announcement in 2022 regarding the phasing out of such synthetic polymers from packaging systems. For those who do not know the business model of DNA, let me summarize the key elements of their proprietary technology that enables them to foray into areas as diverse as cell biology and fermentation. The first component is the code base. The code base accumulates valuable knowledge and data from experiments, allowing this information to be reused to improve program success and lower costs for customers. The DNA foundries are the second component, and they are the factories that allow creating varied organisms and test them for input and output. Basically, they create countless new organisms and provide them different environments and inputs to see what outputs emerged. Outputs are typically enzymes or processing of the input into something else. All organisms that turn out to be useful are cataloged in the code base for future production using foundries. So when a new client comes in, the organism engineers within DNA can look up the code base to see the nearest organism that they have to the product that the client wants, and then engineer that organism further and fine-tune it to produce the exact enzyme or product that the client wants. So this reduces the lead time in their being able to service their client. And this helps DNA to build a massive code base that can be used to provide tailored enzymes on demand. To summarize, just like software engineers draw on existing libraries of code to write new programs, Gingko organism engineers start from their ever-growing code base of cells, enzymes, and genetic programs to jumpstart new projects, driving new discoveries across different industries and enabling provide quick results to new and existing customers. The foundries allow mass production of these designs to meet production demands. Now, turning to partnerships. In the third quarter of 2022, Gingko Bioworks attracted 15 new programs to its platform, demonstrating the company's continued growth. One of its successful partnership was with Merck, which could result in up to $114 million in milestone payments. If you recollect, I had covered this in my video at that time, and you can see it in our YouTube channel homepage if you scroll down or search for Gingko or DNA. The collaboration between the two companies, that is Merck and Gingko, involves engineering enzymes for use as biocatalysts in Merck's active pharmaceutical ingredient production, or API, which is a short form for that. Gingko will utilize its expertise in cell engineering, enzyme design, and process optimization to create optimal strains for expressing the biocatalyst, thereby reducing the cost of goods and improving the supply chain for APIs. By minimizing expensive synthesis and purification steps through the use of Ginkgo's unique fungal strains, the collaboration aims to make biocatalysts more cost efficient and more affordable. In the same quarter, that is Q3 of 2022, the cell programming division of the company showed notable expansion and variety with the incorporation of 15 new cell programs, as I described, into the portfolio, resulting in a total of 85 active programs serving 43 different customers. However, the foundry's revenue for Q3 2022 experienced a decline of almost 29% compared to Q3 2021, and this has been attributed to the absence of significant milestone payments. There are a few risks that I would like to highlight for Gingko before I proceed to talk about my swing trading ideas. The first one is that they need to consolidate and realize the synergies of all the acquisitions and rationalize the overall entities in terms of both human and capital resources. And I've been harping about this for quite a while, mainly because Gingko has not announced any of these to the best of my knowledge. I am anticipating that this will cause a lot of savings in their operational efficiency, and it will be really nice for the share price as well as for the stockholders to know that. Second, as per Simply Wall Street website, shareholders have been diluted 35.8% in 2022. So shareholder dilution is a big issue, and this is the reason why I stopped covering Palantir, because they were continually diluting stock. And I'm looking at restarting coverage of Palantir in our channel because they have had a profitable quarter and they anticipate the next year to be profitable. So please watch out for that. I'll start coverage of Palantir probably this week or next week. Also, I'm going to show you a shareholding pattern for Gingko Bioworks. The pattern shows that the general public has just 14.8% of shares. This is a risk factor because moves due to catalysts, both positive and negative, will be exaggerated because there is very less share float available for the general public. Also, as the prospects improve, the large shareholders will, especially insiders, will be tempted to offload shares to book profits and also to reduce risk to their own portfolios. So let me explain this further. The insiders are getting shares as employee options and incentives to retain employees. For them, it's part of their remuneration and they need to sell it in order to meet their personal expenses. So it's nothing nefarious out there, but the more the shares that are there with the insiders, which is what is the condition with DNA right now, that much more the insiders will look for opportunities. So whenever the share price goes above, say, $2 or $2.15, I'm expecting that the insiders are likely to offload shares, and that's going to increase the general float, which is a good thing. But at the same time, it's going to create a kind of resistance within which Gingko shares are likely to operate. So that's the basis of the swing trading opportunity that I'm going to talk about. But coming back to my point, now if you look at the insider, the institutional investors and the big investors who hold almost 65 to 70% of the shares, I think for them, as the share price goes up, it increases the share of DNA in their overall portfolio. And in order to balance their risks, they will have to offload Gingko Bioworks share. And whenever they start doing that, it's going to be a factor that's going to push down the price of Gingko shares. So there is a lot of headwinds for these shares as it starts to perform. So I am thinking that for this to go into double digits, this share to go into double digits will take a long time. Despite their best efforts, because as and when the share price goes up, there will be sales, and you know that it's not because something is wrong with the company, but it's because the holders who have huge shares will like to diversify the risk portfolio. Finally, there's a new risk that has emerged, which is what I'm very, very much concerned about. Recently, guys, you must have read about the Hindenburg report on Adani group of companies in India, and that has knocked out a lot of value from the Adani group. So it's important for us to pay attention to this. It's important for all the people who are investing in Gingko Bioworks to consider a report by Scorpion Capital, which alleges that Gingko has been producing fabricated revenues through the spin-off firms. If the accusations are proven to be true, it could significantly impact the company's ability to secure funding in the future. And if you were to contrast the share price of Gingko Bioworks, which has been hovering above $1 and below $2 for a while now, to SQZ Biotech, which has been below $1 for a little while, and NASDAQ had given them a warning about their continued listing. So you can see the risk that if the Scorpion Capital report were to come out to be true, then it could impact DNA shares, and that can cause some problems. So friends, you have to keep track of that. Now, having said all of those things, I am coming back to the key swing trading tip that I had promised you at the start of the video. So let us get into the TradingView platform for that. So here we are in the TradingView platform, and we are looking at Gingko Bioworks. I have zoomed out. I will be zooming in very quickly. I just have to show you where we were with these shares. At the peak, it was quoting at around $15.77 on 9th of November 2021. Since then, we have dropped significantly. We have dropped a lot. And here we are today. I'm just going to zoom out to show you where we are today. Right now, we are being constrained by the 50-day simple moving average. And we have converted a resistance which was at 1.82 into a support as of today. And if you look at the MACD, It's trending towards the signal line on a positive manner. It's going to become bullish. That's what it's aiming for. And when you look at the momentum has started coming up a little bit. As you can see here, we have a bullish variance between the price and the momentum. So I'm thinking that this is going to be a bit of a positive impetus for this share. Let me go ahead and mark a resistance as a support out here. I'm going to clean up this this chart so that we can just focus on a limited number of elements and keep this good. So earlier when we had started off, we had just two. I'm going to hide this for the time being. We just had these two lines out here, which I said was the consolidation range in which we were moving. Then momentarily we went up and then we came back again. So for swing trading, I am thinking that we should assume 1.59 to be a support. That was my old support level. But for now, I'm going to draw a new support level because things have changed. Our new support level is somewhere out here. So it's at 1.64. So whenever the share price comes closer to 1.64, I think we should buy it. And at this point of time, we are looking at a key resistance out here, which is going to be a strong resistance for this share because there is this line of resistance, which is a diagonal line of resistance which is forming a bear channel. It's coinciding with the 50-day simple moving average. So it's a very strong resistance. So tomorrow we'll have to see whether Gingko has got the power to go further ahead. But at any point of time, I would say that whenever we come close to 1.64, which is the support out here, we should buy. And we should wait for coming anywhere close to 1.82. So this is the upper limit that I'm looking at. So as soon as it approaches close to 1.8, one can offload it. So if I was to take a example, if I bought the share somewhere close to 1.64 and I sold it at around 1.84, let us say. So we have a 20-cent margin out there. Let me reduce that, shave off 2 cents on both sides, on the top and the bottom. So let us say I have got 18 cents. So if I was to divide 18 cents, 0.8, that is 0.18, if I was to divide it by 1.64 and look at the percentage, so that gives me around 10.9%. Let us say it gives me 11%. So if the whole process of buying and selling takes around a month, worst case scenario, so even in a month you are looking at around 11% return. So it annualizes to 11 into 12. That's around 132% return. So it's a pretty good opportunity out here. But again, tomorrow we have to see where it's going to form the upper bounds. Right now, until that information is available, I'll consider 1.82 as the upper bound, and I'm pretty comfortable with 1.64 as the lower bound. So buy closer to 1.64 and sell closer to 1.8 or 1.79, something like that. So watch out for this space further, and I'll come up with updated bands within which swing trading can be done for DNA. Again, these are my personal thoughts, not financial advice. So please exercise your due diligence. One of the positive factors I see here is there is a bullish divergence for DNA. So I'm looking at the prices going up. But then remember, Scorpion Capital report, that can put a spanner in the works out here. So be careful about that. Today, DNA gained 5.20%. When I say today, I mean it's on the 15th of February. DNA gained 5.2%. So there could be a bit of profit taking in the light of these headwinds out here in terms of simple moving average resistance and the bearish channel resistance. There could be some profit taking and it can start coming down. But I think the best price you could probably get would be somewhere around 1.67. That's the best price you might probably get to buy. And I would be doing that. I'm looking forward to that. And that brings me to an end of this video. Friends, once again, I would request you that if you have been watching our videos and if you have not yet subscribed, please subscribe and help us grow this channel. I need to see the numbers growing fast. We have been doing very well so far, and your cooperation will help us to do much better. Thanks and have a great day. Bye for now.